Good day everyone, I am Michael, the moderator for this webinar. I welcome everyone for today's webinar, which is Multi-State Payroll Compliance 2024. It's a great pleasure for me to introduce our presenter for today, Dana Riom. Dana is currently the Director of Payroll Operation at Anne and Robert Lurie's Children's Hospital of Chicago. Dana has been heavily involved in payroll field for over 17 years. Dana obtained her FPC Fundamental Payroll Certification through the American Payroll Association. I would now like to hand over the floor to the speaker. Over to you, Dina.
Thank you, and welcome to Multi-State Payroll 2024. Let's talk about what we are going to be reviewing today. Multi-state taxation concerns. So we're going to really start with the taxation piece because that's a big piece when it comes to all of this. So definitely want to make sure that you have some visibility around some key things when it comes to taxation. The first thing is residency. So we'll focus on that. So we'll understand residency and really what it means for the employer. We'll talk about reciprocity agreements. So from a reciprocity agreements, what is it and what do you need to know about managing it? We'll talk about resident and non-resident withholding rules. What wages are subject to tax? Withholding compliance issues. So from a withholding compliance perspective, we'll talk about courtesy taxation, state unemployment insurance, administrative concerns, HR concerns, what does that look like, local tax residency rules, and then Department of Labor. So if you walk away with anything today, I want to make sure that you understand what state Department of Labor you should follow. And then we will have a brief question and answer segment. So as you can see, a lot to review in a short period of time. So let's get started. All right, so why is this particular session so popular? People have been mobile for many years. So the first thing is de minimis threshold. Now you're going to find this in your resident, non-resident withholding rules. A true definition of residency by the states is one of two things. Either one, the employee is domiciled in a particular state, or two, they're spending a certain amount of days in a particular state. Now, domiciled from a definition perspective here is a place where an individual has a true fixed permanent home. Now, this slide gives you some domiciled state or some indicators of being domiciled. Reciprocal agreement means residency. It means that you are giving the priority to the resident state. The non-resident state is giving up their right to withhold tax. All right, here you'll see some reciprocal agreements. The other thing here is these reciprocal agreements change. They do change over time. All right, resident and non-resident withholding rules. Reciprocal agreement laws, then you would obviously do those first. Resident and non-resident withholding rules, you would look at that only if there's no reciprocal. Now, again, this is where you're going to find those minimal requirements. So do watch out for that. Those minimal requirements are applicable here. So you will be able to find some of those de minimis thresholds. Again, these are all the things you need to consider when you're determining multi-state taxation. Each state resident, non-resident withholding rules need to be considered. Reciprocal agreements need to be reviewed for all states involved. Domiciled and nexus should always be considered. And then time of work performed. So you can only tax somebody for the time they're working there. All right, what payments are subject to tax? Wages are pretty consistent across the United States. All remuneration, including non-cash items for services performed, is going to be taxable income. All right, state withholding concerns. 2020 brought a big change to the Form W-4. Some states do just exemptions or a little bit of both. So do make sure that you understand those laws in those states because that comes up a lot as well. Tax rate differences, again, that's where that credit situation comes in. Let's talk a little bit about courtesy taxation. And what that means there is that you as an employer do not have a liability to tax the individual. The importance of state unemployment. State unemployment should always be done based on the state the employee works in. So let's go over the 4-part common law test. 1, are services localized? Same thing for base of operation. Third, is there a place of direction and control? What is the employee's state of residence? Traveling employees, so tax turtles, IRC section 162A2 allows for deductions for all ordinary and necessary travel expenses. All right, administrative concerns. Do you know where your workers are? How robust is your timekeeping system? So be aware of that from a timekeeping system perspective. What happens if you comply in each state? Human resources, so who's going to pay any additional tax? Local tax residency rules. You can see the states that have locals. There is another state that should be on here, Kentucky. I did want to add that. People will always ask me, here are some useful resources for them that can be helpful. All right, so some case studies. So that is here for you. Wage and hour. From a wage and hour perspective, you should be following the laws of the state that the employee works in. Frequency of pay laws, again, be careful of this one. Most employers don't have compliance issues except for when there's missed pay. Method of payment, so electronic payments, direct deposit, a lot of states have different laws around that. Same thing when it comes to pay cards. Some states, California only came out with a opinion letter. Some states like New York really got detailed about what they'll allow. That varies across the United States too. Pay statements, I usually suggest that you look at all the pay statement laws of the states that you're in and then just use the most complicated. Deductions from pay.
Thank you, Tina, for the great presentations.
All right, thank you. So on the question side is my email address. Please feel free to email me if you have any follow-up questions. Again, thank you so much for attending today's session. I hope you got a lot of valuable information out of today's session, and I want to say thank you very much, and I wish you all a really great day.
Once again, thank you, Tina, for all the great session. So that does conclude the session for today. Thank you everyone for participating. You may all disconnect now. Have a great day and bye-bye.